We live in a fantasy world now. Reality has been destroyed.
This is the time that we really need to pay attention.
The probabilities are overwhelmingly on gold's side.
That is the best environment to see gold increase its value.
Welcome to Palisade's Gold Radio. I'm your host, Tom Bodrovics. Joining me today is Simon Hunt, consultant in the global economy, China, and the copper industry. Simon, thanks for joining me today. How are you?
I'm good, thank you, even though it's 5 o'clock in the morning.
Well, I appreciate the time difference and you making that work. It's late at night here, but we do this to try and help educate and bring some information to the people. So either way, I do appreciate your time here today.
No problem.
I want to start by asking, is Liberation Day going to go down in history as Impoverishment Day?
Did you say Demolition Day?
I mean, we could pick from a number of synonyms for that.
I think we have to ask ourselves what really is behind Trump's tariff policies. I think, first of all, he wants to reboot the U.S. economy away from consumerism towards making goods. Secondly, he wants to balance the government spending with receipts much better. But I think what is the big move behind these tariffs, which seems not to be spoken about largely, is that Trump wants to shepherd his ally countries under America's security umbrella and allow the rest of the world to set up its own systems. So what we are basically seeing is an expansion and speeding up of the BRICS group of nations' policies towards finance, trade, and currencies. Don't forget that the next BRICS summit meeting in Rio de Janeiro is only 3 months away. And I suspect that the Sherpas are working overtime to put in place policies that can be announced at that summit meeting or posted. So I think this is the big picture. But it also is not just economic and financial, it's also geopolitical. Because you have 3 big players in BRICS: China, Russia, and Iran. Now, Trump clearly is risking a regional war by forcing Iran to basically give up its sovereign rights as a country. For instance, on the 4th of February, based on a national security presidential memorandum that is a legally binding document that required government agencies to carry out specific actions. The basic demands in that memorandum: 1, Iran will be denied any nuclear weapon Iran will be denied any intercontinental missiles. Iran will be denied any other asymmetric or conventional weapons. Maximum imposition of economic pressure will be placed on Iran. And Iran's oil exports will be driven down to zero. Now, no country could ever accept such terms. And in fact, basically what these terms do would be, if Iran did accept them, which they won't, would be allow America and Israel to walk into Iran and to cause regime change, probably backed by the Shah's son, the late Shah's son, who lives in Virginia. So we have these meetings, which won't be held directly between the two countries, despite what Trump says on Saturday. What's going to materialize from that, who knows, except that the terms that America will impose on Iran will be completely unacceptable. And then following that meeting on Saturday, there will be a meeting between Iran, China, and Russia in Moscow on Monday to calibrate a response to whatever America is demanding, which, given the substance of the 4th of February memorandum, implies that the demands will be similar to what was in that presidential memorandum. Does this mean war? It's basically a toss of the coin in trying to find a path forward in this global mess. We have assumed that somehow or other ways will be found to postpone any attack on Iran until maybe 2028. But if Trump finds that he has to accommodate Netanyahu's demands, given the forces that Netanyahu has on the Hill, then all bets are off. And we could expect an attack of some sort on Iran in the months ahead. China's response can be very simple, because by attacking Iran, it will deny China of something like 80 to 90% of its oil imports. So China might say, you deny us our oil, we will deny you your chips by either invading Taiwan or blockading the island. And we should note that very extensive military and naval exercises have recently been conducted around the island. So where is this going to lead us? Financial markets are in a mess. The US and the global economy is or will soon be in recession. And in fact, if you look at things underneath the hood or in the soft US data, America's in effect been in recession since October last year. It's not going to take much now for the rest of the world to go into recession. At 4:30 this morning, I received a note from a friend saying that the White House has announced a de minimis tariff increase on China from 30 to 90%.
I read that it's now 104.
I was just going to come to that.
Okay.
So this gives us a total tariff of 104% added since January the 20th, and the ones from the previous two administrations, making many PCR goods now to be taxed at somewhere around 120%. That will decimate trade between the two countries and force massive decoupling unless there is a negotiated retreat in the not too distant future. In our view, there will be no retreat by China because decisions have been taken right at the top between Xi and Putin that they will stand firm against any actions that America will take. So what people don't fully appreciate is the extent to which China's goods enable America's manufacturing industry to function. Remaking America will take anything from 5 to 10 years. They don't have the skilled labor. More importantly, they don't have the capital goods equipment capacity to allow such a transition to function. So here are a few examples of China's exports to America in different sectors. Consumer electronics, 39% of the total. Home appliances, 24%. Textiles and clothing, 26%. Construction machinery, 60%. Electrical equipment, 23%. And transport equipment, 10%. So, other than the critical mineral exports from China to America, which will clearly be cut, if Trump continues to impose these excessively high tariffs, then China will respond. And what happens to America's economy? Ceases to function.
It seems
so
like
we are in a complete global mess. And I think that if we're lucky, by the end of this year, global central banks in G7 countries and their governments will unleash monumental fiscal spending that creates a recovery, but one that is highly inflationary and won't last through much of 2027. Then, like an earthquake, there's the initial destruction of buildings, but it's only later that you get the secondary and more damaging reverberations. And that's what we're going to see probably in and around 2027, 2028, when the wheels come off the system and you get equity markets collapsing to new lows and the global economy starting a series of recessions, if not depression.
Simon, I want to go back to the idea with Iran here. What is the premise that Trump is escalating tensions with them based upon?
I suspect that he's been given poor intelligence, believing that any pressure on Iran will create regime change. Whereas the reality is that any external pressure on Iran will unify the country, no matter how much disagreement internally there is with the supreme leader. So I think that they've taken Syria as their playbook. Assad was forced to leave. The army collapsed. And America's forces, led by HTS and his band of murderers, took over the country. So I suspect that Trump feels, and probably fed by the Iranians who live in Virginia and LA, are saying, pressurize Iran and the country will fall into your lap. Well, that's not going to happen, as we know. It's interesting that all of the Gulf states have told Washington, you will not be allowed to use your bases in our countries should you attack Iran. And Iran has said, if you use those bases, we will destroy them with our hypersonic missiles. And we're also quite prepared to destroy the oil wells in the Gulf countries. So you come back to the relationship between Israel and America. I think there is an ultimate objective of Trump's, which is that if we force Iran into our fold through a regime change, then we can control the whole of the Middle East using Israel as our bulkhead. But it's not going to work because Iran is not going to succumb to these pressures. They have the capability and the capacity to not only withstand any attack, they have Russia's latest defense missiles. They have their own hypersonic missiles buried deep in the mountains. So any attack, even with the buildup of B-2 bombers in the Indian Ocean, ain't going to work. And there have been suggestions that rather than wait for those B-2 bombers to bomb Iran, that actually Iran has hypersonic missiles with the range that could hit the island in the Indian Ocean and thus destroy the B-2 bombers. So this is a high poker game being played out. And I wish I knew whether there will be war or not. But as my friend Alistair Crook said, war is on the runway. Whether the plane takes off or not, we don't know.
Simon, one of the other things that we haven't really touched upon yet is how this, all of this geopolitical tension as well affects the Ukraine and Russia. It seems that every time there is a ceasefire almost agreed upon, there's so much. It's such a dynamic situation over there. So does this, perhaps escalate that situation as well, or at least prolong it?
Well, answer it this way. Putin never intended to have a quick fix. What he is determined to secure is the fundamental reasons why the war took place. And secondly, to ensure Russia's future security. The reason for the latter is that America will soon have hypersonic technology or the equivalent. Thus, a borderline along the Dnieper River will not give Moscow enough radar warning for any impending missile. So essentially, one way or another, Putin wants to control the whole of Ukraine, one way or another. And what's probably going to happen is the bulk of his forces are already advancing towards the Dnieper River, given now that we've got the spring ground conditions and soon the summer ground conditions, making advances that much easier. Then in the northeast, he has about 300,000 troops ready to advance towards and attack Kiev if necessary. And thirdly, he has about 100,000 troops in the south ready to move towards Odessa and, if necessary, take over the port. Both Kiev and Odessa are Russian cities. So it's not until that has happened that Putin will be prepared to sit down with Trump and negotiate a way forward, because he will then have control over basically all of Ukraine. Talk from Europe, oh, we'll have NATO peace troopers, etc. It's just a lot of hogwash. No way will Putin allow any NATO member country to have any troops in Ukraine. I think there's another big game being played. People talk about how Ukraine is full of critical minerals. Well, actually, if they were economic, Russia would have mined them long time ago. And in any event, most of those resources are in Russian territory in the Ukraine. I think this whole PR about critical minerals agreements is a camouflage for what really America is after, which is Ukraine's very rich farmland. And from what I was able to piece together, the big American financial institutions have issued mortgages over a large part of that land, of that farmland, because obviously the oligarchs who own that farmland were in need of cash. I think that is the big game. And again, it's not something that Putin is going to allow to happen. For American contractors to be running around Ukraine, obviously mixed up with intelligence people, etc., etc., etc. So what happens if Putin gets his way and the farmland and all those mortgages that the big U.S. financial institutions have granted, the assets won't be there for them. So, beyond the actual physical war, there's a lot going on in the financial syndrome.
Well, that's exactly what I wanted to get to. Simon, Europe itself has to approve, a new defense budget. The UK and France are seeming to be, kind of heading that project against Russia. And the US just announced, I believe it was today or maybe yesterday, a new $1 trillion defense budget for the coming year. So that makes me wonder, how do they finance this defense spend?
They're printing money. It's as simple as that, isn't it? Mm-hmm. Where is the EU going to get its money for its budget? I mean, Orbán, the Prime Minister of Hungary, has said that the EU is bust. So again, it's printing money. What's that going to do to bond yields? That's the soft underbelly of all of this. It comes back to debt and finance.
What does that also mean for the value of the dollar going forward, Simon?
That's a very good question. We have the dollar index dropping to 90 by, where are we? Mid next year. And then that's 26, then in 27, down to 60. And then a year or so later, 50.
So 26,
So,
27, 28?
Yeah. But I recall, after speaking to a friend who is passed away now, unfortunately, who knew his way around Washington extremely well. And he said, have a look, Simon, at the possibility that in the years ahead, we will have $2. $1 for domestic use, which will be backed by gold, and the external dollar, which will be allowed to find its own level. Maybe we're in the early stages of seeing that that risk actually happening. I believe that the 8,000 odd tons of American Treasury gold never left the Fort Knox, but had been leased out or hypothecated, and hence all the panic buying that we've seen. Why is it that the Bank of England, if it actually held the physical gold, was saying to buyers, you're going to have to wait 4 or 8 months to get delivery, tells you they don't have it, and that the gold is being rounded up by the big gold banks and the BIS. So that gives you round one. Round two, I think, from what I hear, is that the Treasury, through its agencies, will be taking their gold holdings up from around 8 to 10 or higher over the next 2 or 3 years. So if you are a big buyer, you would love to have a big correction. So what's going on in the marketplace at the moment? Short term, my sense is that it's overbought. And secondly, at these high prices, it's just destroying jewelry demand. So I think over the next 6 or 9 months, we'll see a correction in the gold price to about 2,500. And then that's when we march towards close to doubling that figure by the end of 2028. And maybe it's around that time that our outlandish forecast of a $2 system will start materializing. That's not a forecast, by the way. I think the price is right, but whether it's a $2 system, it's just something that I concocted about a decade ago, following something that a friend of mine tipped me off about.
Mm-hmm. Simon, I read a story today about China having to possibly need to devalue the yuan. So what does this achieve for them? And is this in response to the dollar falling?
I don't buy it. I know a lot of friends who I respect greatly are saying big devaluations on the way. I simply don't buy it. It doesn't make sense. What would China gain from it? And given that the Sherpas in the BRICS, are working on a new currency, it simply doesn't make sense at all. So I think that's, frankly, is hogwash. In fact, I think that by the end of next year, get my note, we could see, the Chinese currency probably around 6.7 compared to the current level of around 7.3. And by end of 2028, 5. I think the interesting one is what's going to happen to the yen, which is now around 146. By early next year, we've got it rising to 120. And by 2028, around 100.
What does that mean for the value of their debt, though?
Whose debt?
Japan.
Ah.
Because it's the seesaw, right?
Yeah,
it's either the currency or the debt.
What will they be doing? They will be bringing their enormous offshore funds back into Japan to finance that debt. I mean, I think that from what I was told the other day, foreigners own $23 trillion of American equities. That's a huge figure. How much of that is going to leave America?
Mm-hmm.
What we don't know is how much is actually owned by China. I bet you it's a large percentage.
Mm-hmm.
But I think there is another game that is worth discussing. According to my friends at Geopolitical, Chinese companies, mostly SOEs, hold between $1 and $1.5 trillion in Chinese banks in Hong Kong. Are we going to see a convergence of the Chinese currency with the Hong Kong dollar? And will the Hong Kong dollar actually become the BRICS currency? Freely tradable globally. Hong Kong is now basically is governed by Beijing. So I think that's something worth watching. Because go on.
We hear many different sides of the story with China and their strength or lack thereof. It's either one or the other. So what issues do you think China is facing at the moment?
I'm sorry, what?
What issues do you think China is facing at the moment?
Well, clearly they've got well, let's start from the premise that I do know about. the worst of the property collapse has taken place. The systemic risk has been contained. The government work plan will see that local governments get finance for key infrastructure projects. And this will take place this year. However, given the uncertainties of tariffs and other American policies towards China, little growth is likely to occur before the fourth quarter. And I think this is probably deliberate policy of Chinese government. Do enough to see that social stability, which is most important, is contained, or social instability is contained. And then they will unleash a pretty large fiscal and monetary stimulus. I mean, my friends, before we had this tariff policy from Trump, were even then saying GDP this year will be no more than 4.5%. So I've actually cut it to between 4 and 4.2. So China has the resources to withstand whatever America throws at them. And China has the ability to respond, as I mentioned earlier. So I come back to the importance of the BRICS summit in May this year, because I think emanating from that will be some new policies on finance, trade, and currencies. And it'll be a shock to the world if BRICS actually comes out with their new currency then. Whether it be via the Hong Kong dollar or some other unit, I don't know. But it will be linked directly or indirectly to gold. Because I said maybe there will be a link between the Chinese currency and the Hong Kong dollar. But that in turn will be linked to gold, because one day China is going to announce our currency is supported by the gold that our citizens own. And if you work the numbers back from when the Shanghai Gold Exchange commenced proceedings in 2002, the number comes out of north of 25,000 tons. And actually, China's ministries, in particular the PLA, probably hold another 25,000 tons. And Russia's holdings, mostly held by, I forgot the name of the company that sits above the central bank, they own more than 12,000 tons.
Well, and I think
so, yeah.
I think another interesting point as far as China goes is their personal savings rate as well, on top of that, to kind of add to that idea of the resilience that they might have.
Absolutely. But I think the other what I think has scared Washington is how advanced China is in applying automation and robotic revolutions to actual operations in factories. One big company has a factory, no humans at all on the shop floor, and it produces a smartphone every minute. So what China already has is the most efficient and competitive manufacturing supply chain in the world. You add on what they are updating with robotic and automation technology powered by A1, there'll be nobody to compete with them. That's their view 10 years down the road, which is the sort of time horizons they use, not the West's 4-year time horizons. So they will weather the storm knowing that A, they have, as you said, the domestic savings of the households and limited debt at the central government level, with their strength being in manufacturing, which they are going to continue to grow, and with the ability to bring the lower income groups' income up the scale. That's going to happen. So I guess if you're looking on a 5-year horizon, you buy the ruble and you buy the CNY.
And you short the dollar.
I didn't say that.
Well, you always have to think of it as a trading pair, right?
No. I was joking. I allowed you to make that comment.
Yeah. Simon, what does this global slowdown mean then in terms of copper as well? Copper is basically seen as the barometer for the health of the world economy. And if the world economy is going into a recession, what does this do for the price and the demand for copper?
Well, copper always used to be the barometer to the health of the global economy. But in more recent years, that foundation has been taken over by big money who have used copper as another chip to play with, putting out stories, optimistic stories on demand, how much investment is going to be needed, and so on and so forth. None of which, they talk about this is what we're going to need by 2035. Well, you've got to get from A to B. What we know from being involved in the copper industry for more years than I care to count is the macro that drives copper consumption, not the hope for future uses. So the price action of copper since the last 3 years anyway has had nothing to do with the real fundamentals, nothing to do with how much copper is being consumed. What the What Trump's tariff policies have done is to shake out these various large positions, whether they be funds or whether they be certain merchants, etc., some of which actually probably they had put options at far lower prices anyway, but they bulled the market up. But internally, they had taken positions at much lower prices. So where do we go from here? I think that the global economy is not going to bottom out until the early months of next year. Copper is going to be pulled in various directions as the long-term bulls try to push the market up and the fundamentals reassert themselves and prices are pushed down. But at the end of the day, we will see prices sometime early next year at around $7,000. And what happens then, it fits our inflation syndrome. But there's I think a very important change will take place within the supply chains. Just-in-time philosophy will no longer apply. Everybody in the supply chain that ends up with the semi-fabricator buying cathode copper, which he then turns into a semis, which then gets sold into industries across the whole manufacturing chain. Everybody will want to hold more inventory because of the disruptions to the supply chains, which are a product of these tariff policies, which can't be recalibrated in a matter of weeks or months. It's a long-term process, and companies will have to use more capital to hold more inventory. So, against that background, we can see let me get the years right, 2025, 26. In 2027, next year, the market will probably have a small surplus of around 300,000 to 400,000 tons. But in 2027, we'll have a big deficit. So between the trough in copper prices of $7,000 early in 2026, by the end of 2027, we will see a doubling in copper prices.
And that's
So that will apply more or less to other base metals too.
Mm-hmm.
And it will apply, as I've said earlier, to gold.
a doubling.
Gold will be, I did say gold would be an almost doubling. I did say that from 2,500. Actually, the figure we've got is 4,800, so I call it 5,000.
Yeah. And that's in this kind of reflationary peak.
Yeah.
Mm-hmm.
Yeah.
So, Simon, just to kind of wrap everything up here, is the biggest thing that we need to be watching for right now the escalation of war with Iran, with Russia, with China, all of these different conflicts?
Yeah, it's basically the regrouping of the world between America and her allies and the BRICS group of nations. And that leads into not just trade frictions, but war frictions. How it all plays out, too early to actually come to firm grips. It can happen pretty quickly, like sometime this year, in terms of conflicts turning into war, or it can be postponed one way or another until around 2028. But it's hanging over our heads, and that will be, business people are going to be very cautious in implementing investment plans, given this uncertainty.
Yeah, it seems like uncertainty is definitely the best way to describe, well, uncertainty and or chaos is the best way to describe the start of 2025 right. So far.
Yeah. And 2020, well, right through till 2028. Mm-hmm. And then the wheels come off the whole system.
Then we have real uncertainty and chaos.
That's right.
Well, Simon, on that gloomy note, I really appreciate you walking us through all of these different parameters of what's going on right now. Of course, all of your work is all available at shss.substack.com, where you post.
Better simon-hunt.com.
Yeah, I was gonna mention that next as well.
Okay.
Simon-Hunt. You've taken to do a semi-weekly podcast, just a little recording on a couple of your thoughts, as well as some excellent articles. So there's lots of material there for people to dig into if they wish, right?
Well, thank you very much for having me, even though it was early in the morning and late at night your time. But we managed to find a convenient time for us to chat.
Absolutely. Simon, it's always a pleasure to speak with you. Thank you again.
Likewise. Cheers.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.